This is a Crypto Legends podcast. In today's episode, meet crypto legend Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle, on why stable in name only isn't enough.
Hello, everybody. I'm Adam Bialy, CEO and founder of Fiat Republic, and today I'm hosting the Crypto Legends show with Dante Disparte, the Chief Strategy and Head of Global Policy at Circle. A month ago, UST and Terra caused shockwaves across markets, governments, and the crypto space as a whole. Today's crypto legend is Dante Disparte, Chief Strategy and Head of Global Policy at Circle. And today with Dante, we will explore why it's not enough to be stable in name only. Many stablecoin issuers ignored or neglected the pre-existence of things like electronic money or money transmission rules at their own risk. Dante is a proper crypto legend, I believe, an active and leading voice with governments, a flag bearer of sorts for responsible and prudent regulatory standards, and champion of delivering USDC, a stablecoin that's not only stable in name, but stable as a financial instrument. Dante, it's a privilege to have you with us today.
Thank you so much, Adam. Great being on.
Awesome. So maybe let's start with your journey to Circle. A bit about you. What brought you to the world of blockchain and digital assets to start with?
Yeah, so I went down the crypto rabbit hole candidly at first as a pragmatist, right? Not neither a crypto utopian nor a crypto anarchist, but originally started looking at the industry from the lens of insurance, actually, and risk management, something that I think still till now remains an area of enormous opportunity and a teachable lesson for the broader market. So I used to run an insurance company that I started some years ago called Risk Cooperative. And a lot of the early crypto companies at that time were coming to us for basic insurance, cyber risk, management liability, and so on. And so the deeper I went, if you could transfer a risk from one person's balance sheet to another, then you have to understand the industry reasonably well. And the deeper I went, the more I realized that there were a lot of bad actors in the market, lots of vaporware. This was at the height of the ICO bubble. But at the same time, there was also this really unique fundamental opportunity powered by public blockchain infrastructure. And the responsible actors were going to create a new category altogether.
Okay, that's awesome. I mean, sounds like a great sort of intro to my next question, which is what attracted you to join Circle of all companies, and the mission to be the pioneer and champion of stablecoins?
Yeah, well, Circle, as you know, is one of these OG firms in the crypto markets that has gone through over the course of the company's history and under the watch of our CEO Jeremy Allaire, lots of really deep and transformative iterations as a company, landing in 2018 with this breakthrough innovation that you could create a dollar digital currency. We don't particularly like the term stablecoin, but that I think of it as analogous to the moment you took your CD collection and you uploaded the CD collection and transformed its format into MP3s. You still had your music, but now your music had the power, the user control, and the sort of programmability, if you will, for lack of a better term, of that the MP3 gave it. And so that same systems upgrade, but without ruining the trust nor without ruining the monetary sovereignty and monetary policy of the underlying fiat currency, is a real technological breakthrough. And so, I've always believed, even from the time that I was with the Libra project before Circle, that the biggest technological opportunity the world has is to turn every internet connected device into a compliant payment endpoint. You can't do that without fundamental technology like blockchains, and you cannot do it if you're subjecting people to internet funny money. So Circle, is just it's not a job, it's a mission. Being at Circle, and we're only just getting started.
That sounds really exciting. It's definitely when you've got a passion, you've got core beliefs, and you've got a lot of history or experience in the space. It's definitely not a job anymore. It is a calling. It almost sounds like hearing from you. So just let's sort of wade into regulation a little bit for now. So you've advocated and insisted on regulation for stablecoins and the overall crypto industry. Can you tell us a bit about how you're collaborating with governments and regulators on this?
Yeah, well, the interesting piece of the puzzle is, you could look back to 2019 with my prior project Libra as one of the catalysts of this global instant reaction, right? For good or ill, the idea that you could take national currencies and digitize them and then enable them on this open internet, if you will, this kind of internet of value, ran into a lot of real barriers and real public interest reflected in the form of hearings in state houses, hearing in Senate and Congress. And then literally that same set of policy conversations took place all over the world. I benefited from having a front row seat in those conversations. And it triggered, on the one hand, reactions such as, well, the best thing central banks can do is to digitize their national currencies themselves. And at the same time, it also has triggered this kind of idea of a free market-based approach that was also rules-based, where you could innovate on the movement of money, but still conform with rules around financial inclusion, financial integrity, and sort of financial crime compliance. Circle as a business, I think is demonstrating that a rules-based model where the private sector and the free market can innovate, but subject itself to really high standards, as good as, if not better than, banks and traditional payment systems innovators. I think we're starting to prove that out. So despite the fact that there's been this massive multi-billion-dollar, trillion-dollar crypto correction, and there was the collapse of the Terra algorithmic stablecoin, I think despite that, I've never been more optimistic actually about the policy and regulatory direction of travel than now. I really do think regulators and policymakers and whole governments are starting to compete for a position in Web3 that wouldn't have been possible but for this boom and bust cycle that you see in any breakthrough industry.
And do you think, just to kind of follow on from that, do you think like the downturn, if you call it that, it's actually healthy for the longer term development of those sort of that intersection of regulatory community and the innovators on the other side from the crypto side? Do you believe that?
Yeah, well, and if you read any of my early writing, for example, in Forbes about crypto, you could sort of find and replace the date and reissue it in 2022, and frankly, many of the same issues
Right.
still hold. The anytime there's this big of a market correction, we obviously have to have sensitivity to the people who are hurt and the markets and the sort of reputational risk this carries. But it also underscores that this is still a builder's market and it's still very early, and that the companies that have fundamental business models, the companies that have revenue models, the companies that have business discipline around risk and compliance and fundamentals will be the firms that, I mean, John Cunliffe, for example, at the Bank of England, said out loud that the companies that survive this particular crypto correction will be the Amazons of the future.
Exactly.
I aim, and I think Circle aims with humility to prove him right, that there's a good way of building and there's a consistent way of building, but it's about the long game rather than the kind of short boom and bust cycle that crypto, like the early internet, has demonstrated.
Couldn't agree more. Couldn't agree more. So, like, just switching gears a little bit. So, education of regulators. I mean, I'm exposed to this as well. We're a TradFi regulated financial institution. How much do the regulators already know? Based on your interactions with U.S. and U.K. governments, and how much do they need to still be, exposed to in terms of recognizing stablecoins, regulating them, and the wider crypto space as well?
Yeah, I mean, I think that piece, of course, is at on the one end, one of the most gratifying aspects of my job actually is the ability to help inform what sensible regulatory policy looks like, and also, candidly, also help inform what should the national and global economic competitiveness narrative be with the advent of Web3. And so the beginning point for me is to describe for policymakers and regulators and governments the things that you and I cannot do with our money if money continues to only live in physical form, and if money continues to only be conveyed by traditional firms who at some level suffer the curse of brick and mortar banking or the curse of lack of competition. And so when you hit the argument from that basis, it's very hard to defend the idea that there should not be innovation, including innovation on public internet infrastructure and public blockchains, for how money can evolve in the 21st century. So The good news is I've been repetitive for many, many, many years now on that particular basis for why blockchain matters. And it extends so far beyond financial services. That's the other piece of the puzzle. So today, I'm gratified, for example, in the United States, that President Biden's executive order starts to tag other agencies beyond the financial regulators for reviewing blockchain and Web3 for both the risks and the opportunities. We couldn't vote in the United States during one of the most consequential rounds of elections, other than waiting in a physical line despite a pandemic and despite public health guidance to stay at home and quarantine.
Right.
Wouldn't it be amazing if device-centric voting in a safe, irrevocable, permanent, and instantly recordable manner that had disaster proofing inherent in it would have been a powerful way to exercise your democratic right? So now I think prototyping the civic tech and the gov tech innovations that blockchain can support, the pandemic has shown us that technology was the only difference maker, and I think society has a lot to gain from companies like mine and companies like yours building inside the perimeter as opposed to living only on the internet.
No, totally. Of course. I mean, wouldn't it be better to conduct that vote in a digital manner? Of course. Um, So, what are your must-haves? You look at regulation right now around the world, and in Europe, in the US, like in many ways, Europe with MiCA seems to be sort of leading for now. Hopefully, the US catches up with a bill or piece of regulation of its own. Where do you think? What are the sort of non-negotiables, right? The points where you have to cover that, because otherwise you're not really even attempting to regulate anything.
Yeah, well, I think there are a couple, right? And the interesting thing, of course, and Terra actually gives us some really powerful examples here about you could build the very best digital currency in circulation, and we think to some extent Circle's success is a byproduct of exactly that model. Regulation first, guard against leverage, and that if you say it is a dollar, it should be in fact backed by a dollar. I like to call it the Jerry Maguire test. If a digital instrument purporting to be a stablecoin can't answer the show me the money question, then it's very likely you're subjecting yourself to something very different. I'm not to say that innovation shouldn't also be enabled, but Terra was more of a digital derivative than it was a stablecoin, to the extent the term is supposed to imply economic stability and no buyers and spenders remorse, which was one of the original challenges of Bitcoin being used as a payment systems innovation. But now, the idea that there is no way regulators can get this right, I think, number one, ignores the pre-existence of electronic money rules. Circle in the United States was one of the early pioneers of getting crypto companies across the finish line with existing regulations. And so we are licensed in the US on level playing field to big companies like PayPal or Stripe or Apple Pay. And I think the Europeans and the UK for sure similarly have rules around electronic money. Step one, conform with those rules. Step two, you have to defend the use of these innovations on non-proprietary technology. That's code for public blockchains. The openness of these networks is a feature, not a bug. And that's where we think there's a lot of education still that has to be had with policymakers, regulators, prudential regulators. But interestingly, the financial crime compliance bodies around the world actually understand the benefit here. That financial transactions recorded permanently, available and observable by anybody with a basic internet-connected device is creating over time exponential improvements in financial inclusion, while at the same time making it very hard for bad actors to hide. I think that feature, the financial crime compliance bodies understood very, very long ago. Financial Action Task Force and a number of others understood that benefit. I still think you could have that level of openness, preserve people's privacy, and create this era of more open global banking and financial services, and still live within the frameworks of as good as the traditional banks and others, if not better.
That's fascinating what you're saying. I think so. I was at the Point Zero conference in Zurich last week. There was a guy there from the Bank of International Settlements, and he said that any new project, be it digital or traditional, that has to do with anything to do with money, or is to be a financial instrument, needs to meet like those three basic rules of financial markets. So adequate liquidity management, adequate capitalization management, and adequate leverage management. How do you? What are your thoughts on that? Like, how do you agree? And then how do you think that can be reflected in regulation?
Well, so I completely agree. And however, this is an example of where the policy and regulatory conversation stops short. Had you managed for those three, but you ignored the market conduct and the value chain that is implied of what I like to describe as device-centric banking and payments and
Hmm.
software intermediated capital markets, then you would have still not stopped something like Terra from happening. Most regulation and most policy is typically backward looking. And it's notable that for since 2019, the entire planet has been having stablecoin conversations, but never really contemplated the rise of algorithmic stablecoins as a potential source of complex systemic risk. It's a teachable example in the backward-looking nature and the mismatch between what policymakers and regulators will do,
Right.
and how markets are evolving. I also think it's not a particularly useful strategy from a national vantage point to tell a free market developing and competing on the internet, hurry up and wait for our white papers to be written before you launch in our jurisdictions. I think that's not a particularly great model, and it has left many jurisdictions behind. So if you just solve for those three issues, but you didn't describe nor fully understand how digital assets enter circulation in the first place, which is that step one, the most granular layer, is the endpoint. You and I, as users, have a device-centric wallet. The wallet will either live in a personally hosted manner or in a hosted manner. It then points to an exchange. It then points to the issuers and so on. And so the market conduct questions haven't yet been entirely answered, but I think you can absolutely argue that fiat-backed stablecoins and digital currencies ought to conform with those prudential standards.
Sure.
But regulators need to also pay attention to the digital wallet environment and the value chain under which digital assets enter circulation in the first place.
And there's a lot of education to be done in that particular space. Love the answer. So, okay, moving off of regulation for a minute here. So you already voiced your opinion on CBDCs at Consensus. I was there. I listened to it. But I would love to dig a little bit deeper on that. So, what do you think is going to happen over the next couple of years at the sort of CBDC versus stablecoins arena, if we can call it that?
Yeah. Yeah, well, and it's not that as you could probably detect, Adam, and if you were in the consensus conversation, then you realize it was a pretty epic debate.
It was.
But it's not that I'm against one form of innovation or another, right? As someone who's served in a public sector role here in the United States on our National Emergency Management Agency, I was one of the advisors to FEMA over the course of many years. I don't think we should draw bright lines in free societies on who can and cannot innovate. I think that's a very, very bad operating model. And it ends up becoming an anti-democratic, anti-free market, anti-competitive set of choices. If you're telling an industry, you can't innovate, or only banks can innovate, or only the public sector can innovate. So to make no mistake, I believe in the model of innovation should be supported by all of the stakeholders in a free economy. However, the CBDC debate ignores that operating reality, right? Which is why I've been a long-standing opponent to the concept that the only answer to fears of big tech companies digitizing currencies is that the central banks have to become retail banks. That ignores the value chain for how money is transmitted. It ignores the role and the money creation role that banks play and payment systems innovations play. And frankly, it ends up becoming, I think the UK Parliament said it best, a solution in search of a problem.
Yeah.
There's a whole host of other questions, right? Do you, as a public sector leader, want to make a 100-year technology bet in the face of Moore's Law and in the face of companies like yours and Circle and all the open innovation taking place with open source technology? That's a very bad long-range bet. I analogize it to aviation safety authorities flying planes and building jet engines instead of having a rules-based model for competition in the skies. And so you can still have a CBDC, but you will still need privately issued digital currencies like USDC in circulation because we're fulfilling a very real world need. Not to mention the fact that a CBDC in circulation would very likely be a domestic payments innovation rather than a global one.
So you're seeing them basically as complementary, not either or mutually exclusive.
Well, it's sort of well, first, CBDCs are still abstractions, right? 105 central banks around the world, according to the Atlantic Council, are thinking about digitizing their currencies, but largely it's still an abstraction. The Chinese central bank, the People's Bank of China, has a digital yuan in circulation, potentially with between 250 million or up total wallets activated. But I see it very much as a Western world abstraction. USDC is real. There's $4 trillion of on-chain economic activity that's been powered by USDC across multiple public blockchains. And the bridge between the digital use case and the real world use case is not only built, is growing very fast. Companies like Checkout have processed $300 million and counting with USDC. Bitso and Circle have a partnership on remittances using USDC between the United States and Mexico. And all of these types of use cases are lighting up in the free market, things that central bank digital currencies only dream of achieving because they're still abstractions. So in the end, if they exist and they coexist, great. But in the interim, I think free market competition is creating really good, safe uses for money in an always-on internet economy.
Yeah. So in a way, you're showing them how it's done. It's showing them the money as well.
Well, and not only showing them the money, Adam, but I think in your company's doing something very similar, right? Not only showing the money, but showing that our types of businesses, the good actors, can withstand 100-year shocks. Right? The crypto market correction is like going through a 1930s style loss of confidence and run. And companies like ours are growing while the rest of the industry is shrinking. I mean, USDC is on course of becoming the third largest digital asset in circulation. That's a model of resilience and a model of shock resistance that perhaps many traditional financial services firms would not withstand. And it's proving that the use cases will in the long run bear out new forms of payments and money on the internet.
Absolutely. Fully agree. So I have to do this. I need to go like a little bit into USD now because I mean it was you can't run away from this. It was a significant development. So can you talk about your views on the collapse of Terra Luna in particular? Also your views on the competing stablecoin USDT, because I saw it, DPEG. I was one of the keen observers of like what is actually happening as those sort of critical market conditions hit, right? What lessons have we learned? And did we miss a trick as in this industry here as well?
Yeah. Well, no, look, I think in hindsight's 2020. And as a person who has written a book on complex risks, I know better than to make predictions, but I also know when I'm seeing something that I've seen before that I recognize it for what it is, right? So in hindsight, it's easy for a lot of people to describe Terra as a digital derivative. It had all the properties of very risky financial innovations. And so we as an industry would benefit enormously from having a lot more humility and frankly, a lot more lower levels of tolerance for financial alchemy and for financial engineering. My job is made harder despite the fact that I think Circle is broadly successful, broadly understood, and broadly in the room as policymakers and regulators have these conversations. But if the market cannot decouple good crypto from bad, and we're all at the mercy of financial engineering and over-engineering at the speed of the internet, then it's going to be a big uphill battle for the entire sector. And so I don't relish at all being contemporaries of some of these innovators and innovations, but I do think the industry has to look at itself in the mirror and ask, will we want to be subjected to the brand relationship with firms and with people who, by all measures, are over-engineering things and producing exceedingly risky assets. Do they belong on the shelves at exchanges, for example? Many crypto exchanges talk about this idea of being token agnostic. I joke, is it token agnosticism or is it tokenized narcissism? But either way, Terra belonging on the same shelf under the stablecoin category with USDC is not a good look for the industry at the market conduct level. And if regulators are being accused of always sharpening their knives and always looking for a fight and regulation through enforcement, crypto has to stop making it easy for them to do that by really, really rejecting digital alchemy and rejecting products that are masquerading as stable, living on the same shelf as something like USDC, for example.
Digital alchemy, I like that. I really like that. Completely agree as well. So what do you do, like? What are the things that you do at Circle that sort of go against what happened or contrary to what happened with USD that make you stable, not just in name but also in practice?
Yeah, well, it's sort of step one, live within the boundaries of regulatory oversight, right? So back to where I started, many here in the United States argued for a while that, crypto and stable coins were this wild west of internet banking and there were no rules. And I took offense on behalf of the nation's state money transmission and banking supervisory regulators, right? And that, we have licenses in all the US states that require it for the movement of money in electronic form. I wrote a paper about it, in fact, after I had to sit through the Senate Banking Committee, a pretty heated committee hearing about not only stablecoins, but decentralized finance and a whole host of other issues. In some respects, I was the public defender of all of crypto in that hearing. And in it, make sure there were some important myths that were corrected and misconceptions that were corrected. Beginning with the fact that there are rules in the US for electronic money, just as there are in Europe and just as there is in the UK and other jurisdictions. Now, the second point is, of course, the assets backing an instrument purporting to be stable really, really do matter. And so in USDC's case, we only have cash and US treasuries in reserve sufficient to meet the demands for USDC outstanding at all times. But then, like anything, if you want to not only pass the Jerry Maguire stablecoin test of show me the money, the next question in audit land is trust but verify. And so instead of taking my word or Jeremy Allaire's word or going to Twitter and making promissory statements on Twitter, we have one of the leading accounting firms in the world called Grant Thornton reviewing the sufficiency of these reserves and providing a backward attestation once a month, every month since the first USDC was issued till today, that there's always sufficient USDC reserves to meet the demands outstanding. All of these kind of prudential bank-like structures, I think, are standard setting. But is that enough to guard against market conduct issues or to guard against all the risks that you could see in this crypto ecosystem? That's where, as a business, we need to also drive the industry and the ecosystem to up level and improve their own standards, right? Otherwise, it's regulation through enforcement if the industry can't behave collectively as an industry. Because remember, Circle and USDC are wholesale financial markets infrastructure. You as a user reach and receive USDC because of a digital wallet provider. That free choice is yours to make, but who you choose to bank with at the digital wallet level will tell you a lot about the market conduct and the consumer protection standards that you would enjoy at the retail level as well.
Yeah, absolutely. I think, the industry having a more unified voice around this would probably help as well, and is necessary at some point. Some of the ideas that we have at Fiat Republic, bringing people together on the crypto side, so that it's not this ball of chaotic energy that is unpredictable for everybody, but the crypto industry itself. It's one of our sort of key concepts as well. Okay. So, on just looking at the horizon, so I was obviously following the recent announcement around the Eurocoin. Really excited about that. I think it's definitely something that was missing, and it was long overdue. If I were to be blunt. How do you see the space overall? The digital asset space, the crypto space evolving over the next few years. Any projects apart from Circle's own projects, protocols or networks that you're particularly excited about?
Yeah, no, well. First of all, thank you for being a keen observer. We share that in common. I too track all the great developments in your firm as well, and I do think again this multi-billion, $100+ billion market correction produces a rectitude, but it's also a handover to firms and people and teams and developers who have their eye on the prize, right? Who are going long and not just trying to play the speculative game. So I do think we will look back at this particular crypto correction and analogize it most closely to the dot-com bubble bursting, and that you need any successor company to hand over to a new one to get a lot of things right. So we're very optimistic broadly as a company. We have a number of things that we're introducing of our own, like the Euro stablecoin project and others. We want to approach that with the type of humility it deserves, and approach it with the sense of the policy and regulatory boundaries that the Europeans expect, such as MiCA compliance and things like that. So you could expect of the Euro and other initiatives from Circle the same paradigm we followed with USDC. Build for the long run, try to get it right, and be a part of the policy conversation at all times. I think along the way, we also believe very deeply in this idea of the developer community, right? I think of our world as the world of programmable, composable, exquisite internet money. And we're only just seeing the opening acts of what that looks like. So Circle, for example, we've put down a flag for our first ecosystem conference called Circle Converge later this year in San Francisco in September. And one of the reasons we want that to happen is that we think we're only seeing the very beginning waves of what happens when people start developing and putting talent behind programmability of money. We're nowhere close to even the starting line of what that looks like. But that's going to be a really exciting breakthrough to watch.
It's going to be super exciting indeed, and I can't wait to see some of those developments that are going to follow after this market correction. Thank you so much, Dante. It's been a pleasure to have you here. I'm going to wrap it up. Any closing comments that you'd like to share with us?
Well, look, other than to say thank you to you, Adam, and your colleagues for being on this Crypto Legends podcast. I've got to make sure I earn that title or don't lose it, rather. And I think the last point I would make is the long game. If you think about what you and I cannot do with our money if it only remained in analog form, these are innovations that not only matter, but this may very well be one of the most important technological challenges of our time is to make Web3 and crypto work for more of humanity. So let's revisit where we stand in a few years from today.
For sure. Let's do that. Everybody, this is Dante. This was Dante Disparte, Chief Strategy and Head of Global Policy at Circle. Adam Bialy, CEO and founder of Fiat Republic. Thank you so much for your attention, for your viewership, and on to the next one.